5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Interim deal. The US and Iran reach a deal to reopen the Strait of Hormuz. It does leave key sticking points, though, for the next stage of talks. Global relief rally. Stocks gain, bonds also. Oil falls to a 3-month low after the US and Iran agree to end the war. And traders brace for a big week in central bank decisions, with the Fed voting on rates under new Fed Chair Kevin Warsh. Let's get a check on markets around the world now. Here's Winnie Su for the latest from Asia. Winnie.
Good morning, Bonnie. A very happy Monday from Asia as investors really cheer for that interim deal between the U.S. and Iran, and also the prospect of the Strait of Hormuz reopening. Now that lower oil prices really supporting MSCI Asia here, up about 3%, taking its 2-day gains to the biggest since March 2022. You have the Nikkei 225 here at another record, while the Kospi index is also up by about 5%. Now, interestingly, we are seeing some of the underperformers, the likes of Southeast Asian stocks, really also outperforming the major benchmarks here as well. Now we take a look at the currency space, because they are also strengthening on the back of a weaker US dollar. You have the South Korean won strengthening as investors continue to buy South Korean stocks, while the Japanese yen here also edging slightly higher ahead of that Bank of Japan decision meeting tomorrow. For now, we are still expecting one rate hike to come.
Indeed, Winnie, thank you so much. Winnie Su there. Now to London for a look at Europe. Here's Justina Lee. Justina.
Good morning, Bonnie. Now, there's one story across European markets today, and one story only, and that is the prospect of a U.S.-Iran deal and lower energy prices. Now, we start with the bond markets here. UK gilt yields kind of falling, 8 basis points ahead of that BOE decision this week, as traders start to price in maybe just one more rate hike from both the BOE and the ECB coming this year. And now, when it comes to the stock market, in the U.S., we're used to saying stocks have been looking past the war. But in Europe, where stocks are a lot more cyclical, we're seeing a big reaction today. And, especially in those automakers, and that's why we're seeing even stronger gains in Germany's DAX index. And we flip the board here. That's helping the Stocks Europe 600 mark another all-time high. Of course, we've been saying that for the S&P 500 for a while, but finally we're seeing that too for Europe, Bonnie.
All right, Justina, a big week for central bank decisions. Also, that deal that is supposed to be signed Friday, it has oil, at least prompt month futures, down. So as you can see, WTI below $80 a barrel. We have Brent crude trading down 5.5%, just around $82 a barrel. And December contracts also much lower, and we're seeing this relief rally across the board. If we look at futures, you can see S&P futures, Nasdaq futures, Russell futures going to power the indices higher today, it looks like. Now, in terms of records, we haven't seen them for the S&P cap weighted or the Nasdaq 100 for a couple of weeks, but we did see on Friday a record for the equal weight S&P and also the Russell 2000, so we're still at that record territory. In terms of bonds, we're also coming down on yields, so down almost 5 basis points on the 2-year and almost 4.5 basis points on the 10-year yield. That will ease pressure potentially a little bit on the Federal Reserve Chair Kevin Warsh. Of course, there is the potential that there will be a hike next week, but at the same time, or at least talk of a hike, at the same time, it does make him more liable to be able to hold without any criticism. All right, let's get to some guests that we have this hour. We have Sam Riggall of Sunrise Energy Metals joining us shortly. And then Kelsey Berro is also going to speak with us, JPMorgan Asset Management, to discuss the market impact of the US-Iran deal. So officials then set to meet in Switzerland Friday to formally sign an interim agreement to reopen the Strait of Hormuz. Let's get more now from Bloomberg's Abir Abu Omar in Dubai. Also, we have Bloomberg's Oliver Crook on the ground at the G7 in France. Abir, let me start with you. We don't have a text released by either side or anything like that. So what do we know about what's actually in the deal?
Good morning, Vonnie. So for now, what we know about this MOU that is set to be signed later this week in Geneva is that essentially both sides have come to the table and they've agreed that the MOU will be signed. We don't have much clarity on the details in the MOU. Now, what we know is that the Iranian side has come out and said that those details will emerge after the signing takes place later this week on the 17th of June. But what we know for now is that the Strait of Hormuz would be reopened immediately upon the signing of the agreement. And then that would follow a period of 60 days where more technical negotiations will take place between Iran and the United States. And now those technical negotiations are aimed towards mainly one goal in particular, and that is Iran's nuclear program. Now, President Trump had said earlier that the negotiations will take place in this 60-day period, and then if agreement on the nuclear program comes to fruition, then great. If it doesn't, then either an extension of that ceasefire will take place again, or we could see a return to military escalations in Iran. So while this MOU, as we've been calling it, the interim deal, is a step towards a positive direction, it's definitely not, it doesn't ensue anything certain. We could see a return to hostilities. And just one thing to point out here is Israel's actions in Lebanon do continue. We've heard from multiple ministers in Israel. That includes a defense minister, Israel Katz, and also the national security minister, Ben Gvir, that came out earlier this morning and said that the deal between Iran and the United States Israel is essentially not bound to this MOU, and that it will continue its actions in Lebanon, and that essentially they need to stop the hostilities by Hezbollah in southern Lebanon. So that is one element to watch out over the next few days and before the deal is signed. And Vonnie, just hours before the two sides have come to an agreement, Israel had struck suburbs in the capital of Lebanon, Beirut. So that escalation in the Israeli action as well is something to keep an eye out over the next few days. Meanwhile, the Strait of Hormuz, for the time being, is still effectively closed. We await and see the trickle of ships through the waterway once the deal is signed.
Ollie, let me ask you how this changes the calculus, if anything, at the G7.
Yeah, I mean, I think this is fundamental to the conversations that will happen here at the G7. This deal, of course, everyone will sigh a great deal of relief here, but they're also going to be very curious on what is actually in this deal. What is the timeline here? And also, critically, what are some of the roles that some of the American partners can play, potentially in the Strait of Hormuz, potentially in the architecture of a deal? And that is going to be, I think, front and center here for when Donald Trump arrives here a little bit later this evening in his conversations with G7 fellow leaders. Of course, since the very beginning of this war, you've heard it from the host of this meeting, Emmanuel Macron, the president of France, who said that there will be a military contribution by the Europeans the day after, when you have a ceasefire. Now it seems that we're closing in on this ceasefire. What effort will that be? How will the Europeans be involved? We've talked about these sort of demining missions that the Europeans could be involved with, led by France, led by the United Kingdom. But we also got a statement from the E3, the sort of three big economies here within Europe, saying that they would actually also be a part of sanction relief with the United States if these sort of benchmarks and these sort of milestones are reached by the Iranians. So this, of course, will be the big focus. We should say that the leaders of Qatar, the UAE, and Egypt will also be here. These are people that will be, of course, fundamentally involved in the architecture of this deal sort of going forward. And, of course, no trip to Europe would be complete without a tariff threat. And we got that from the President of the United States. He's saying that he's going to threaten France with 100% tariffs on wine if they continue to move forward with their proposed taxes of American tech companies. We also have the CEOs of AI firms here, as we have these sort of reports about AI nationalism from the United States. So a really packed agenda here, Vonnie. We'll be watching it very closely. And I think for Emmanuel Macron, really an opportunity to put on display his relationship with Donald Trump, and of course putting forward that dinner, that invitation to President Trump, which I think he knew would be irresistible to the President of the United States, dinner in Versailles on Wednesday evening. And again, potentially getting some more inspiration for the Oval Office from the Louis XIV big castle there outside of Paris.
Yes, indeed. Ollie, thank you so much. Oliver Cook there, and of course Bloomberg's Abir Abu Omar. Oil sinking following that interim deal between the US and Iran. Let's bring in Ven Ram, Bloomberg MLive macro strategist. Then the deal gets signed Friday. We don't have any details except for the fact that, oil is going to start transiting presumably immediately, but we don't know how long it will take to get those barrels back to market. Is this an appropriate market response?
Well, I think that the market response has been measured, Vonnie, and insofar as that is being measured, I think that's valid because, after all, we have got a deal. Whether or not it holds and what the fine print shows on Friday, we'll see. But I think there is grounds to be optimistic here. But as I was saying, the markets are measuredly optimistic, which is what makes me even more enthusiastic about the way the markets have taken to it. If you look at the rates market, Vonnie, I think that, the rally has been rather mild. And, investors are thinking that, some of the major central banks will still have to raise rates despite the end to the war. And that is notable in the pricing for the ECB and the Bank of England, and also the largely unchanged for the US as well. So I think that the markets aren't running away with the script. So I think that gives a lot of hope that, this rally can continue, provided the details on Friday bear out that optimism.
Yes, and that we get to Friday without any hiccups. Can I ask you about yields? Because we're pricing in just about 16 basis points of a hike now by the end of the year. That's down, from a full rate hike by the end of the year. Does this take the pressure off Kevin Warsh, or will he still sort of feel like the CPI data shows a little bit too much inflation pressure?
I wouldn't be surprised at all that if Kevin Warsh came in and said, look, we need a period of temporary higher interest rates before we are able to lower them. And that is the risk that the markets haven't cottoned onto, haven't priced at all. And I think there is that distinct element where Kevin Warsh, we have known him to be hawk in his previous avatars, and I think that he can be a hawkish regardless of what Trump wants, and says, look, we need to contain inflation first before we get down to cutting rates. And what is going to make it even more tricky is that he doesn't want the dot plot, he doesn't want the summary for economic projections, he doesn't want the Fed's he doesn't want the guidance. So he could very well do away with all those three factors, which means that rates volatility will uncork, which is a factor that the markets aren't pricing in yet.
No, indeed. In fact, the MOVE index is at a multi-year low. Ben Ram of Bloomberg M Live, thank you so much. Now to other top stories trending on the terminal this morning. The US government has ordered Anthropic to disable access to its most advanced AI platforms for all foreign nationals. This after discovering it's possible to, quote, jailbreak the guardrails of the Fable 5 AI model. The order is the most significant incursion by US officials into an AI company's operations. Anthropic called it a disproportionate response and said the move could, quote, halt all new model deployments for all frontier model providers. Shares of SpaceX higher again in the pre-market after its blockbuster Friday trading debut. Shares climbed as much as 7.7%, pushing it on track to extend Friday's 19% gain that gave the company a $2.1 trillion market value. Its strong debut boosting the IPO prospects for Anthropic and OpenAI. UniCredit and Commerzbank escalate their takeover battle, with both companies accusing the other of distorting information and appealing to the German securities regulator BaFin to step in. The dispute centres around whether tendered shares accurately reflect investor support for UniCredit's roughly $44.6 billion bid for Commerzbank. Coming up, Sam Riggall, CEO of Sunrise Energy Metals, talks China's control of the rare earth supply chain as G7 leaders gather in France. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Rare earths also on the agenda at the G7 Leaders Summit in France as countries seek to reduce dependency on China. China accounted for around 70% of rare earths mined last year and controls 80 to 85% of the supply of scandium. Sunrise Energy Metals pledges to mine enough scandium to meet global demand as part of its Sisterston Scandium project. Sunrise Energy Metals CEO Sam Riggall joins us now. So, Sam, just to let everybody know, scandium is used in everything from, defense and aerospace components to bicycle frames and literally lacrosse sticks and even revolvers, as I understand it. Is your mine up and running? At what point will you be actually taking scandium out for use?
The mine is not up and running yet. It's under construction. So it's one of the most advanced critical minerals development programs or projects today. And we hope to be producing first scandium from the mine site in the middle of 2028. It is not an easy material to mine. While it's in the Earth's crust in lots of parts of the world, it's very hard to find this material in high concentration. And in this part of New South Wales, we have some of the highest grade scandium in the world. So we're rushing as quickly as possible to get this project to market.
And what's the projection for when you will actually make revenue from this, Sam? I know that your stock has appreciated literally 2,900% over the last year, but in the last couple of years it has traded in the pennies because that's what happens with miners, right? Investors are scared that there's going to be dilutory, equity raises and so on. Does this stave that off for now?
This is a relatively capital light project to build. And we have principally China to thank for the interest in the stock over the last couple of years. China's extreme export controls on scandium in particular is what they consider to be a dual use item for both civilian and defence purposes, really woke the market to understanding how critical this metal is. You pointed to the fact that it's used in all sorts of applications, bicycles, revolvers, but also on key pieces of infrastructure and technology like semiconductors, solid oxide fuel cells that are building the power generation infrastructure to power AI, advanced defence alloys that are used in 3D printed components and cannot perform and cannot reach the sorts of strength and durability that are needed from other alloys. These are the markets that scandium services, and without scandium, it's not tried to say that we would be back to a 3G world tomorrow if we didn't have scandium available for the semiconductor industry, for example.
Absolutely. And I know you just invested $5 million in a company based out of UPenn called Agni Semiconductor. It's half its $10 million seed round. It's a fairly new semiconductor company, and you're looking to own about 30% of it eventually to make sure you have a client, I guess, downstream, right? Why would you need that if scandium is in such demand by so many industries?
Well, a couple of things. One thing is that this technology is extraordinary, what the Agni team have developed. They've developed a non-volatile memory built not on transistors and capacitors, but on ferroelectric diodes. So the ability to pack memory together into a very compressed package that doesn't need constant electrical current feeding it promises enormous potential, particularly for AI infrastructure where real energy bottlenecks and constraints apply. The second part, obviously, is that it is a technology that depends on scandium, much like wireless communications chips do. And the part that really interests us there is that we need to start building out not just the upstream part of this supply chain. We also need to start filling the gaps down to the end user. And we're making some really strategic investments at the moment to ensure that not only will we be providing the raw materials to supply to US, European, Japanese, Korean customers, but that at every point in that supply chain where products need to be converted into something else, we have the ability to provide that service.
Now, the rare earth deal that President Trump made with Australia, is that what made this investment possible and even attractive? What else does it allow you to do?
Oh, look, it was certainly a big catalyst for the support of this project and the impact on, I guess, the share price you saw over the last 18 months here. There is very strong support coming out of the US at the moment. And as we saw last year at the G7 meeting, which is currently being held, the discussion was very much focused on how do we incentivize enough new Western capacity to address our supply and demand issues. And that was very much focused on how do you liberate capital to do that. The discussion this year is going to be quite different. Once you accept that Western supply will be built, the issue then very quickly becomes how do you make it sustainable over the long run? And in many industries, if you build new capacity in the West, but continue to allow China to control a lot of these markets, these businesses will not be around for long. It will be sunk and wasted capital. So there needs to be a lot of thought put into the policy settings that will allow Western nations not only to build these mines efficiently, but also to ensure that they can play on a level playing field over the long run.
Well, Sam, we're looking forward to seeing what comes out of the G7. It's a fascinating rare earth and looking forward to watching your progress as well. Sam Riggall of Sunrise Energy Metals. Coming up, we'll look at what energy executives are saying about the reopening potentially of the Strait of Hormuz. A look at what else is making headlines in your front page news next. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal is reporting executives in the oil industry have been sounding the alarm over dwindling stockpiles. For 15 weeks, the US and other countries have been having to dip into oil tanks, salt caverns and strategic reserves to make up for the millions of barrels trapped behind the Strait of Hormuz. Now, with stocks nearing critical levels, the speed at which these barrels can return to market will determine the trajectory of energy prices. Next up, the New York Times on the UFC cage match at the White House Sunday night for President Trump's 80th birthday. The crowd included the tech and media billionaires Mark Zuckerberg and David Ellison. Knicks owner James Dolan also in attendance. And the Washington Post reporting on a skydiving plane crash in which 12 people died in Missouri, 65 miles south of Kansas City. The Post says the plane failed to gain altitude on takeoff, then hit the ground at a steep angle. The pilot and 11 passengers on their way to spend the afternoon skydiving were unable to evacuate. Aviation officials will investigate the crash. Coming up, Kelsey Berro of JPMorgan Asset Management as the peace deal in the Middle East fuels a relief rally. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Interim deal. The US and Iran reach a deal to open the Strait of Hormuz, but it does leave key sticking points for the next stage of talks. Global relief rally, stocks rising, bonds also gaining, oil down to a 3-month low after the US and Iran agreed to end the war. And traders basing for a big week in central bank decisions, with the Fed voting on rates under new Fed chair Kevin Warsh. So we're back at early March levels on oil, with Brent crude, the front month contract, below $83 a barrel. WTI just sticking around the $80 a barrel mark. The oil market apparently waiting for an actual signature and very much the details on how and when the strait will reopen and whether it'll be easy to pass through, when shippers will feel comfortable sending their ships back through. But it looks like the oil market is pricing in some relief, at least right before potentially we came to critical levels on those reserves. We're seeing it across asset classes. Futures pointing to really nice gains this Monday morning for the S&P, the Nasdaq 100 and the Russell 2000, which itself hit a record on Friday, as did the equal weight S&P. We've been seeing a little bit of rotation, obviously. It's been a couple of weeks since we saw the cap-weighted S&P and Nasdaq 100 hit a record, but even that phrase alone is quite surprising. We did still hit records for those in June. Now, it also bears looking at the bond market, because of course we have that Fed decision this week, and yields are much lower this Monday morning once again. So we're down to 404 and change on the 2-year, 444 in the 10-year, and well below that mark that we had seen last week, with the 30-year at 494.34, taking out some basis points of potential hikes priced in before the end of the year. So US and Iranian officials meeting in Switzerland on Friday to sign an agreement to end the 3-month war and reopen the Strait of Hormuz. That's the current situation. Let's get more from Bloomberg's Abir Abu Omar in Dubai. Abir, no text released. What do we know so far about what's actually in this memorandum that is apparently going to get signed by everybody?
Good morning, Bonnie. So perhaps we know a little bit more detail over the past 30 minutes since we last spoke. Fars news agency, that is state-affiliated media in Iran, is citing a person familiar with the matter, saying that Iran is not going to charge any fees in the Strait of Hormuz over the 60-day period that will take place after the MOU is signed on Friday. So if you remember, Bonnie, we had spoken over the past couple of months about Iran working on this mechanism with Oman to be able to issue fees to tankers going through the Strait of Hormuz. Now, what this report is suggesting is that this fee is not going to be implemented over the next 60 days. What happens afterwards could very much be a fee that is implemented. It's not clear how the U.S. is going to respond to this, or whether this is part of the wider negotiations that will take place. But just to go back on the MOU itself and what details there are, we don't have a text of it yet. We know that we're going to get a text after the interim deal is signed later this week on Friday, June 17th in Geneva. But what we know about it, very little. It's that the Strait of Hormuz will be reopened immediately with the little caveat that I just provided to you, and then the 60-day period of a ceasefire that is extended upon the arrival of the 60th day. Both the U.S. and Iran will be negotiating Iran's nuclear plans and its nuclear weapon plans, according to the United States side. And then if that sort of goes into effect, then that is good news for the United States. If it doesn't, then both sides could agree to either extend that 60-day period for more, or we could see a return to hostilities. President Trump did say that if both sides do not get their concessions met by the end of that ceasefire period, he could go back to militarily get involved in Iran again. That is most of what we know. Some of the other things that we had spoken about multiple times, the blocked assets, the oil sanctions, we don't have much clarity on that yet. But once the MOU is released, we'll get to understand just a little bit better what the both sides had agreed to overnight.
Do we know what role Israel is going to play or how that will proceed? At one point, Iran had said this will not be signed if Israel continues bombing in Lebanon.
Yeah, so that's another thing that is unclear, Vani. We've heard from multiple Israeli officials since the agreement was reached this morning. That includes Israel Katz, the defense minister, national security minister, Ben Gvir, and also Smotrich. Those are hardliners in Israel. And all of them were pretty much against the deal that is being signed or the deal that is taking place right now. All of them saying that the incursion in Lebanon is not going to stop. Ben Gvir saying that essentially Israel is not binded by this MOU between Iran and the United States, saying that the hostilities by Hezbollah have to be responded to and that Israel has to sort of tackle those. And so it's quite a good question when we talk about Israel. You mentioned that Iran had refused to come to the negotiating table earlier in the negotiation phase unless Israel stops its hostilities against Lebanon. So we don't know what exactly will take place. President Trump himself said that Prime Minister Netanyahu had been quite difficult in this whole negotiating phase. So another sticking point that we'll have to wait and see how it takes shape over the next week or so, Vani.
All right, Abir, thank you so much for the update. That's Abir Abu Omar in Dubai. Joining us now is Kelsey Berro, fixed income portfolio manager at JPMorgan Asset Management. Kelsey, do we have a little more clarity today than we did, let's say, Thursday or even on Friday?
Perhaps a little bit more clarity. I think people are probably waiting to see the text of the agreement to really understand what's going on. What I've noticed looking at the bond market is the reaction yields are lower today, probably less so than I would have expected given the move in oil. And I think some of that has to do with the other event risks that are coming up this week, particularly the Fed. So if you were just to look at the level of oil and try to map what the 10-year yield should be based on the relationship since the start of the war, the 10-year yield should probably be closer to 420, 430 than 440. But as we know, since the war, a lot of things have happened. We've had better labor market data. We've had the hotter CPI as a result of higher energy prices. And as a result, you've had higher real yields. And, there is still an event risk to get through here, which is, I think, why, the rally in 10-year across the Treasury curve today is maybe a little bit more muted than what you would have expected, given that we have reached this deal.
Well, that said, we also got inflation data last week that might have cheered investors just a little bit. It could have been hotter, right? We didn't see that much of a pass-through from oil gains, for example, or the war, if you like. Does that take the pressure off Kevin Warsh, or is he still looking at potentially wanting to convince people that a hike is necessary at some point?
So I think that this meeting has really come together for him. Our expectation is that he's going to be able to keep the committee fairly in line. In fact, for the first time in a while, we may have no dissenters because I think the committee has already really coalesced around a consensus, which is the Fed needs to stay on hold, and we need to remove the easing bias within the statement. If they do those two things, I think really most of the FOMC right now is on the same page.
The deal here, assuming it does get signed on Friday and nothing derails between now and then, really does sort of help that process, right? If oil gets back on the market, we're not likely to see at least inflation continue to rise. Or are we? Are there other things in the economy that might cause inflation to continue to rise?
Yeah, so when we looked through the CPI data last week, we really did feel that the majority of the stickiness in core inflation is still a function of supply shocks rather than overheating demand. So last year it was the tariffs. We're actually seeing signs that the tariff inflation is really starting to burn off in terms of the impact on the data. And now, of course, we have the energy impact, which impacts core inflation primarily through airfares, which is considered a core part of CPI. But when we look at the broader inflation picture, particularly the two things that we're more focused on as it relates to the demand side of the inflation picture are wages and shelter. Wages continue to moderate, and that's interesting, particularly because we have seen a reacceleration in growth, in job growth, for example. And shelter inflation continues to remain fairly well behaved. And so to us, that's a sign that despite the fact that the labor market has improved more recently, job growth has reaccelerated, and that has reduced the negative left tail risk associated with a much weaker labor market. It still looks like we're generally in balance, in equilibrium. This isn't a labor market that is really producing a lot of inflation heat that the Fed has to be concerned about at this point.
So we're seeing a rally today. Do we continue to see that throughout the week if we get, the removal of the easing bias, but nothing else, particularly from the Fed?
Yeah, so there's two things really at this point. We have the Fed. We also have retail sales this week, which I do think will be interesting because we are still trying to assess how the consumer is managing higher gasoline prices. Now, hopefully, the peak in gasoline prices is now in the rearview mirror, but we have seen pressure on real incomes, the savings rate, real disposable incomes, and we want to see how the consumer is handling that. But I do think relative to what is priced into the market, which as I look this morning, it's still about a 75% chance of a rate hike by the end of the year. I do think that if we were to get the Fed on hold, remove the easing bias, but within the dot plot, still show a bias towards cuts in the out years, that would be considered a bit of a relief for the market. And as long as the MOU deal continues to be in place, we could rally throughout the course of this week.
Marvin Loeb, State Street, last week told us that on the balance sheet, the ship has sailed for the Fed. It'll be difficult for Kevin Warsh to actually downsize the balance sheet or right-size it, as he's presumably going to characterize it. What do you think at JPMorgan Asset Management? Is the balance sheet going to be a problem?
So we think that the balance sheet is about as small as it can be, given the environment that we're in. So, they've gone through a balance sheet normalization. They had to stop that in December because, the way that we like to look at the balance sheet is looking at the size of the balance sheet relative to GDP, and that's around 20% right now. And it can't get much smaller than that, just given two things. One, the economy has grown, so the balance sheet should always be growing in size, regardless of if you're doing QE or not doing QE, just because of the growth in currency and circulation. And then also you have banks, large banks, which hold reserves at the Fed, as long as they are required to hold those reserves at the Fed. That is another reason why the balance sheet stays large. So we're not seeing any real concerns there. I do think that one thing that the Fed is doing behind the scenes that maybe people have forgotten about is continue to normalize the composition of the balance sheet by running down agency mortgages and reinvesting them back into treasuries. I'm sure that's something that Kevin Warsh is supportive of, but in terms of wholesale shifts to the balance sheet right now, don't see that as a base case.
All right, Kelsey, cannot wait to see what happens on Wednesday and how it happens, right? How he's going to address the public. Kelsey Berro of JPMorgan Asset Management joining us this morning. Now to other top stories trending on the terminal. Former Fed Governor Stephen Miron is set to return to his former hedge fund. Axios reporting that he'll be returning to Hudson Bay Capital as senior strategist. He spent about a year at Hudson Bay before joining the Trump administration. UniCredit and Commerzbank escalate their takeover battle, with both companies accusing the other of distorting information and appealing to the German securities regulator BaFin to step in. The dispute centres on whether tendered shares accurately reflect investor support for UniCredit's roughly $44.6 billion bid for Commerzbank. New York City officials are ramping up preparations for a ticker tape parade on Thursday, celebrating the Knicks' NBA championship win. It's set to kick off at 10 a.m. Eastern near Battery Park and travel north along a section of Broadway known as the Canyon of Heroes before ending at City Hall. It'll be the first ticker tape parade in Knicks franchise history. Coming up, Anthropic shutting down Mythos following an order from the US government. We'll get the details. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Anthropic shutting down its most advanced AI models, including Mythos, following an unprecedented order by the Trump administration to keep the technology out of the hands of foreign nationals. Bloomberg senior market strategist Neil Campling joins us now for more. Neil, what exactly is the threat here? If it's a threat in terms of cybersecurity, is it just foreign nationals whose hands it should be kept out of?
Morning, Bonnie. So it appears that what's happened is that a third party, so I presume a client of Anthropic that was using the new tools, which were the advanced models, Fable 5, Mythos 5, found basically that they became aware of a method of bypassing, which is known as jailbreaking the models. So in other words, a way of effectively getting around the safeguards that Anthropic had actually put in place. So it appears that the government were made aware of this ability to bypass these safeguards. And now we have this situation where, as you mentioned, we have this export control in place, a directive in place. And it means that we now have, under national security concerns, that the company have actually had to disable access for foreign national employees as well as all international usage. Now, this is it's a dramatic standoff between the company and the administration. And Anthropic themselves had actually said that the safeguards they felt was so strong that many users had complained that they were too broad and too restrictive. So it's an interesting turn of developments, given that these new tools had only been in the marketplace for 3 days.
Is this government turning regulator, or is it government turning punisher, Neil?
It's an interesting way of analysing it. I suppose the fact is these tools are so powerful and we don't know exactly their capabilities in many senses. So I don't think the government wants to restrict the overall usage of AI too much, because if we look at the impact of AI on the growth in the US economy, the trillions of dollars that are being spent on building out the infrastructure, technology and AI are crucial to the whole growth of the US economy and actually propping up the global economy. So I don't think they want to be too restrictive, but at the same time, they probably also want to ensure that the tools are obviously set for viable standards, and also to be used in the best interest of the US government and the US corporations as well.
Neil, can I ask you about SpaceX? So shares obviously closed 19% higher on Friday. I do want to point out that was not from the first print, though. That was from the IPO price of $135. The momentum looks like it might start to continue again today. What is the verdict on the street?
I think the verdict is that, given this is, as you mentioned, the biggest IPO ever and a huge amount of stock that came to market, the fact that the IPO went well, and by that I also mean that it wasn't volatile in that the stock didn't halve and it didn't double. It seemed to be well received by the market. It's reacting again well today. And actually, interesting article on the Terminal today called "In the Big Take," talking about JPMorgan estimating of $1.5 trillion of equity issuance coming to the market in IPOs and in secondaries over the next 2 years, suggesting that there's a lot of appetite and good consumption of that liquidity coming into the marketplace. So it's definitely a healthy reaction, I think, from market and investors for sure.
Yeah, as long as conditions remain the same, I guess that could be true. Neil, thank you so much. Bloomberg's Neil Campling. Coming up, we'll get you set up for your trading week with the G7 and central bank decisions on deck. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead for you for this week. Obviously, the G7 Leaders Summit in France kicks off today, and we're anticipating some kind of a signing at that on Friday. We get rate decisions as well this week from the BOJ on Tuesday, the Federal Reserve on Wednesday. That's the first, obviously, under the new Fed chair, Kevin Warsh, and of course for the BOJ, the market anticipating a rate hike. And on Friday, the US and Iran will meet in Switzerland to formally sign that deal to reopen the Strait of Hormuz. Let's get a look at some pre-market movers now. SpaceX is higher in its first pre-market session, up 6%. Now, bear in mind, we opened on Friday at 150, up from the IPO price of 135 by 11%. The high print on Friday was 176.52. So we're opening potentially below that today. Nevertheless, a good start for the second day of the SpaceX trade. Robinhood markets as well benefiting from that, and record amounts of traffic on Friday after SpaceX's debut is benefiting to the tune of 3.5% pre-market. And Paramount Skydance also had a little bit of news over the weekend. The deal with Warner Brothers Discovery cleared by the Department of Justice, and Paramount is up 4%. All right, let's take a look at your macro picture going into this Monday with a little bit of enthusiasm potentially for this memorandum of understanding that is presumably going to be signed on Friday. All the parties are in agreement about that right now. So WTI down 5.6%. We're at levels that we saw around the 10th of March. And it's the same with Brent crude. We're just below $83 a barrel, so down 5.2%. The further out contracts are also much, much lower. We'll see how fast ships will actually start transiting the strait and when shippers will feel comfortable letting their crews go through. But for the moment, it's risk on around the world. Let's take a look at futures pointed higher across the board. We have Nasdaq 100 futures particularly pointing to a gain of 2%, and the Russell 2000 hit a record on Friday, as did the equal weight index for the S&P, not the cap weight index. We haven't seen a record for the cap weight index since June 2nd, all of 2 weeks ago. And then in the bond universe, you can see that as well. Also the fact that this takes the pressure off the Fed a little bit on rate hikes, so the possibility of a rate hike is now at about 16 basis points priced in, as opposed to 25 basis points priced in before we got the news of the war. We have the 10-year yield at 444.53, and we're well down now from our highs of 502 and change last week. We're at 494.54 at the long end. That is it for Bloomberg Brief. Surveillance continues the conversation next. This is Bloomberg.